Hey guys, Mike here. So I hope you guys are doing well, and I got another jam-packed video for you guys. And one thing you're going to see here is, and I'm going to go through this, you're starting to see recession hedges disappear. Why would that be? Okay, how do we know that? So we're going to talk about that. I'm going to show you as well what's going on there, as well as what do you got to look forward to? What happens when the market has a crazy run like it has had the first 6 months? I'm going to show you what's happened in the past, especially going 1995 forward, and I'll explain why that is, okay? And then we'll go into some of your favorite stocks. But I did finally find out, thanks to one of you guys, that why Walmart, or why the family, the Walton family, is selling so much Walmart stock. And I showed you a few weeks ago they sold 400 million. Must be nice to be that rich. Well, they eclipsed that with this right here. Last week they sold almost $700 million in stock. So that's over $1 billion in the month of June that they've sold. And I don't keep up with this family, so I didn't know what was going on. And I'm kind of ashamed of myself because I'm a big NFL fan. I just didn't notice they had done this. But they're buying the Denver Broncos. And so I was like, oh, okay, well, I didn't know that. So obviously, I don't know what the process is to buy it, but it's going to be around $4.65 billion. So I'm assuming maybe you just got to put up some collateral. So that's why they're selling all this stock. Maybe not because they believe Walmart stock is going down. So thanks to whoever put that in the comments. I really appreciate it. But that's why they're selling $1 billion in stock for the month of June, because they're going to own a football team. Now, that leads into recession hedges being taken away. And you can see right here, implied volatility on HYG options has fallen to the lowest level since before the Fed began hiking rates, right? And you can see it plain as day what's happening. And, why is this? There's a couple reasons why. It's probably 50 reasons why. One is, look what the government's been doing, right? They're spending, no problem. The infrastructure bills, everything else going out the door, $800 billion in the month of June going towards debt, right? And so why? What is this $100 billion? Because they have to refill that treasury because it supported it for like 4 months, right? And so again, we'll be at 33 trillion. I keep wanting to say billion, but it's trillion within, I don't know, probably 4 or 5 more months. And one reason for this, and I talked about this before the rate hikes even began, was because the interest payments per day have doubled from $1 billion per day before the pandemic to almost $2 billion per day in 2023. And you can see right there. And again, I know I own treasuries, so they owe me money. I know other countries own treasuries and bonds and everything. So guess what? They owe them money too. And so imagine I guess I could say your credit card payment, interest payments doubling like that, like literally 100% doubling. Like, wouldn't that be crazy? Like how soon would you be bankrupt would be the question, right? But because we just keep printing money and doing our thing, no problem. I'm going to address that in just a minute. Now, of course, the other things, what else is happening? Well, thanks to Joe Consorti right here, Powell just said he won't shrink bank revenues below 2.5 trillion. And so basically, in other words, all that imaginary money from QE since 2008 can't go away. Banks rely on it. Monetary intervention, of course, blah, blah, blah. The Fed has signaled, they're going to, obviously, what they've done with other banks, but these reserves aren't going to go down. Okay, and like I told you, unless you go out there and start burning the money up, that money's not going anywhere. It's still in the system. It's just moving from one account to the other, right? And you got the liquidity drain. What I tell you, all those fear-mongering videos were garbage, okay? Again, the reverse repo account going down. What's going up? Treasury. Some of the others is coming out. Again, you do got reserves going into to try to fill the treasury as well, which is why you're not seeing liquidity jump up, but it's not crashing either. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And again, I know it's simplified, but reverse repo program, here's money, goes over to the treasury. Did we lose anything? Do we still have a whole pen? Yes. Now, should there be some drain on liquidity? Yeah, I think that's why you saw liquidity, as I show the members all the time, drop some when you see the bank reserves drop like that. But for the most part, a lot of it is coming out of the reverse repo program, okay? And so, again, this whole, oh my God, remember how the video said in June, like, oh, we're going to drop 30% because of liquidity. No, and I never tell anybody, man, you need to unsubscribe those channels. That's just a hot mess. I mean, they got your clicks, they got their money, all that stuff. They made themselves feel good or whatever. But I can promise you they didn't believe any of that. And if they did, they didn't do any research, which makes it even worse, okay? And so, again, Can we have some liquidity go down? Yes. Does that affect the markets? Absolutely yes. Another reason why the market should be affected, because we've had such an enormous run up in the first half of the year. It is rarely matched, which I'll show you here, okay? But, one thing I want you to start doing for me is, in simple terms, always I keep things simple, right? That's what my grandpa used to tell me. Acronym KISS, right? And, think about the market, not the economy. Think about the market this way, in the simplest of terms, and try to put put yourself in these people's shoes. Remember, in 08, I've proved many times, and I don't think anybody disagrees with this anymore, the government, the Fed, everybody they took over the real estate market, the stock market, and the bond market, right? The Fed was the biggest buyer of mortgage-backed securities and bonds from like 2010 all the way up to the pandemic, okay? And through the pandemic, okay? And so that props up all the markets. So they own them. It's their markets. It's not free market anywhere. It's not real capitalism, as we discussed in our Discord yesterday, kind of laughed about it. It's crony capitalism. And now, so think about this. So they own all the markets. Well, who owns them? The billionaires, right? The billionaires are the ones legally owning them, right? They legally write them checks, send them on vacations. I mean, it's even worse now. We found out they don't just do it to politicians. They do it to the Supreme Court. They actually own the Supreme Court now, right? But sending them on vacations and selling them houses at cheap and putting their families up in houses and all kinds of crazy mess so they can get decisions in their favor. It's not even, I think it's a fact now. I don't think it's like allegedly. I think it's actually kind of proven now, right? And they don't even deny doing it. That's what's even crazier about it. They don't deny doing it. So the billionaires own them. Well, what else is the billionaire? Who owns more real estate, bonds, and stocks out there? Billionaires, right? There's not a whole group of them, but billionaires, or essentially a whole lot of them, not a whole group, but they own it, right? And so do you really think, they're going to allow the people they own to ruin what they have? No. And that's why, remember, because the government, the Fed, them own the markets, it's their baby, right? So what happens when your child gets in trouble? What do we do with them? We bail them out. That's just a natural parent instinct. That's what we do. We bail them out. So what does the Fed and the government and everybody else do when the market some part of the market gets in trouble? They just come in and bail them out. And they do it, a lot of it is done secretly behind. It'll come out later on, but there's QE behind closed doors we don't get to see for a long period of time that is taking place, okay? And that's why I told you with those bank loans, when they were allowing these banks to bring in the bonds that were way down in value, but say, don't worry, we'll give you face value or whatever it was, and then you can borrow as much money as you want, just because you're letting them borrow it. Here's $150 billion in my hand. I borrowed it. Somebody gave me $150 billion. Which one's more? This $150 billion or this $150 billion, right? It goes back like the question of which one weighs more, a pound of feathers or a pound of gold? You know that they're equal, right? So don't matter if you gave it to me or I lent it out, it's still a form of QE. Whether you lend that money out or not, but it's how the market perceives it. And so the market perceives it, that's QE, which technically I agree with them. All right, and so that's what's happening. So just keep that, it's just a circle, right? The billionaires aren't going to allow their money to be messed with, right? Who runs the markets down? Who runs the market down last year? That's the fund manager quant funds. They'll run the market down in anticipation of something to happen, right? Like they anticipated a recession in 2022. It did not happen. What are they doing now? They're running it back up because all of a sudden they're going, recession maybe. If it happens, we'll just crash the market again. No problem. And they'll run it down before they think the recession's here, just FYI. And so that's what's going to happen. We'll see, of course, if we have a recession or not. And so, but just think about the market in the simplest of terms. Like that's what the market, and the economy is not the market, and the market is not the economy, right? And so just keep that in mind. And so again, now going back to the market and what we expect going forward in the S&P. Well, here's the top 12 years. And you can see, you can go back to 30s if you want to. Look at 33, by the way, 58% on the S&P. That is amazing, right? But I just want to scroll down to the bottom where we start to get to I just want to point out the ones from the 90s forward, really, right? And so if you go 97, up 20% on the S&P, had a 10% green year, okay? 95, 19%, 13% green year. 2019, 17.35%, up almost 10%. 1998, 16%, up around almost 9%. And then you go to 2023, up 16% in the S&P. What are we going to return the second half of the year? But if you look at all those years from the 90s forward, every one of them were green, and almost every one of them were, well, almost double digits, right? And I know this year's different, especially when it comes to the S&P, because we're so tech heavy right now with it driving it. And of course, if the banks don't go and oil stocks don't go, then that is a major problem for the S&P. Okay, but what do you see some of the bank stocks doing? Like, they're moving, right? They're starting to get money into them. The big banks, that is, especially, right? Regionals, that's a whole different story. They're much higher risk. Like, you can buy them, but you never know which one's going to go out of business and which one's not, because they're trying to dump those commercial loans like crazy right now. Okay, and they got to dump them on somebody. And so, yes, this year is different for the S&P. That's why anything to do with tech seems to be a lot safer, because that's where the safe haven is already. And that's what makes a lot of people, and rightfully so, say, there's no way this is a bull market. Because every bull market, you have financials and energy and stuff participating and not really participating, right? Have they done in the past? You have all that small caps participating. They're not really participating, right? And so, again, the big funds, you can see with quant funds here, I told you about quant funds running the market now. You can see they're going to find a way to move this market up. What have they done? They're putting it in the tech funds, and the quants have bought big into this rally. Volume control funds added 150 billion of stocks in the past 6 months. Equity exposure in the 89th percentile. Okay, and so again, they're usually the first ones in. They'll probably be the first ones out if they see something going on and happening. But they're the ones really, really driving the tech rally. Just look at that. I mean, look at that. That's a mess, right? From 2022 December into now. I mean, wow, it's much straight up. Oh yeah, they just piled in. And looking at the stocks they're piling in, look at Meta, right? Again, hadn't touched the 50-day moving average all year, just up in this channel. Now, you can say this is a channel if you want to, and right now it's consolidating, right, to try to move up, and I'll put the gap on here in a minute. Now, you can say it's a channel. It looks like a channel to me, but some people, what they're going to do is they're going to say, no, it's a rising wedge, and they're going to move that line up right here and do like that, and then they'll adjust the other one over here. And it goes, oh, it's a rising wedge. And what happens with rising wedges? You know, they get so narrowed down, you eventually fall. And of course, it's left a graveyard of gaps behind as it's moved up and stuff. And so that could be the case, however you want to look at it. And let me know in the comments how you're looking at it. You know, and then you got, of course, the gap, right? It's sitting very close to the top of the gap. It's consolidating right there. Is it consolidating, or, is this accumulation or distribution happening, right? So if it's accumulation, it's going to move up. If it's distribution, it'll finally take a breather, right? And if you look down at the bottom, I mean, since June, what do you see on the RSI? You see divergence, right? The stock keeps making new highs while the RSI is going, maybe trying to tell us something. It did on AMD, it was successful. Not always successful, though, okay? What's going on with BABA? Again, Chinese still aren't coming out saying they're going to put a whole lot more money into the market. It's heading down. A lot of people are targeting that $79, $80 range because that's where it bounces pretty much every time. And so we'll see if it gets down there or not. Again, falling below, you can see it on that volume node right there. If it gets below that, yeah, it's a good chance we're definitely going to go down there. It might just follow this trend line all the way down to get that bounce. We'll have to see if China comes out with some news about any kind of QE. And guess where the stock's going? All right, it's going up. All right. Netflix had a huge day on Friday. I mean, good Lord. I mean, you think the stock can't stop, but guess where they're marching it to? Again, they're marching it to this other huge gap. They're going to fill that gap. That's what they want to do. Right? It's not guaranteed. It's got to get through that main trend line I have drawn right there, which goes way back. But I've been saying it for months, and that's what they keep on doing. AMD again was down 20%, bounced off the trend line right there. I was kind of hoping for a 50 bounce, but it got close enough, right? And now it's starting to move up into this volume gap right here, and it can slice through pretty fast. This is what it did to the left, as you can see. And so, yeah, you can see this absolutely go to 119 if we stay bullish, no doubt, because that's where semis are, and especially with the news that came out. There's a report that came out saying, especially with the report that came out Friday, saying that AMD chips are at least 80% as fast as NVIDIA, and some people are looking for a cheaper alternative because the NVIDIA chips are really expensive. So you have companies that just can't afford those, right? And so they'll go with what's second best, right? People can't afford Nikes, they go with what's second best. I don't know which shoe that is, but that's what they go with. And so again, it could be a very good alternative. And so keep an eye on AMD right there, because the chart on it looks way healthier than it does on NVIDIA or a lot of the other chip stocks. So just keep that in mind. And Tesla, obviously, what was that? 1, 2, 3, 4 green days in a row right there. And it's above that volume node. Absolutely could shoot up to 276. Again, we're not in this. It's always hard to judge it because now you're getting to the point where you kind of like it because now it's not in this gamma squeeze area, right? And so you can see to the left, we have the gamma squeeze up from 100, and all of a sudden it consolidates sideways, goes down, up for a while. And so to me, I find it hard to judge Tesla stock, I'm just being honest, the chart, when we're not in the gamma squeezes, because that's when it goes up. Again, if call options start flooding in like crazy, it's going up. When that doesn't happen, it tends to struggle if you look at the chart. And so again, here's Apple, which is stunning. This one right here actually breaks out of the channel, gaps up. Okay, I mean, again, this is another one. Hadn't touched this 50-day moving average in the year of 2023 yet. If we draw this trend line from the October lows right here, you can actually see that maybe that's the next target, around 200. Actually got an upgrade, I think a target of like 240. And so you can see that's where we have some support resistance going on. That could be the next target. Now, as far as data coming out, this week's going to be a short week. Remember, Monday, half day. But we will have ISM manufacturing. Nobody seems to give a crap about manufacturing data, as we've seen in the market, because it's terrible. You'll have FOMC meetings on the 5th, because it'll be closed on Tuesday for the 4th. And so, again, can they possibly say anything they hadn't already said, right? But then, of course, you'll get some jobs data coming out on the 6th. Thursday, you're going to have the ISM services, which people pay more attention to, and then the JOLTS job data coming out. And then Friday, you're going to have non-farm payrolls and the unemployment rate, which is projected to not move at all, which is not what the Fed wants to see. And then look at the forecast for non-farm payrolls. That's a big drop from 339K prior to a forecast of 225K. Now, one thing that is happening, and you can see what put this problem, we have this shortage in the job market, is what's going on with retirees, right? You can see going up from 2020, people just retiring like crazy because they made so much money. Look at the big jump at the end of 2022, and even in 2023. Now you see it kind of rolling over some, but that's what's creating a big shortage in a lot of different job areas, is because you just got so many people retiring. Because remember, not only retiring because they made money, you got a lot of baby boomers. Remember, every baby boomer out there, which I think is the second largest generation now, will be retired or eligible to be retired by 2030. That's only 6.5 years away. It seems like a lot, but it's not. Okay, and they made so much money, they said, let's leave early, right? And then, of course, 2020 put the scare in people, and they said, better start living life now because it can be going like that. Okay, that's another thing. I've met people that actually told me that and retired early. So, you know, that right there, the slowdown of retirees, if it's people just volunteering to go out that aren't even eligible for Social Security yet, that'll help out in the job market as far as, you know, obviously keeping people employed and less people retiring and quitting, all that good stuff. But coming in July, obviously another thing we have mentioned yesterday, you're going to have CPI on the 12th. You're going to have banks reporting on the 14th, should be huge. But you're also later on in the month, if they do a rate hike, you know, how will the market digest that? Right now, you know, it's suspecting there's going to be a rate hike, right? But again, the pace of the rate hikes already slowed down. They see the end in sight. That's really all they care about. They're looking forward and all that good stuff. So again, you want to call it a melt up, bull market rally, bear market rally, or whatever you want to call it. That's just how the market's looking at this stuff, okay? And July, historically, we'll see if it continues again and we get, what I say, will this be the 16th year or something? If it goes green, having green July. So we'll have to see if tech can stay hot, especially the big boys, all right? The Magnificent Seven and all them, okay? So anyway, I hope you guys got some out of it. Give me your feedback, please. I always like to hear from you. Hit that like and subscribe button if you don't mind. Really appreciate it. And I will see you guys tomorrow.